My name is Michael Guyett, publisher of the Lead Lag Report. Joining me for the hour is the man who calls himself the head coach at Y Charts, Sean Brown. Sean, for those who are not familiar with your background, introduce yourself to the audience. Who are you? How did you get interested in the financial services field? And what got you to want to actually launch Y Charts to begin with?
Yeah. Hey, first, thanks for having me on. I'm thrilled to be here. A few things. I've been in the financial services and software space for 30 years. Actually, I'm an old guy now. Don't know when that happened, but somehow it happened. Couple finance degrees. Always had a real interest in capital markets, and I've always seen that applying a little technology to the financial services space would help this under-teched space quite a bit. But just a real quick point, YCharts is 12 years old. I actually didn't found YCharts. I came on 6 years ago. So I got the great opportunity to take a company that was going really well and take it to new plateaus, which is what my charter has been.
Do not cancel my Y Charts membership because because I said that. So you joined several years ago. Okay, so let's get into that. So, but I'm sure you know the history of Y Charts. So maybe just for the audience,
Oh,
talk
yeah.
about the history of Y Charts, who the actual founder was. Talk through that a little bit.
Yeah, White Charts was founded by two guys back 12 and a half years ago, R.R. Antragolian and a guy named Sean Carpenter, who spelled his name Sean the wrong way, Shawn, as opposed to the right way, which is Sean, which is how I spell mine. Um, these guys, one came out of Google, one was a deep technologist, and their mission was to almost like Yahoo Finance and Google Finance to bring the world of charting and securities and capital market analysis to the everyday retail trader or everyday retail market follower. So the software actually came into being as a free tool for everyone to use. And that was the legacy. We've moved into being a platform much more carefully honed for the professional market and the institutional markets.
So the natural thing that comes up when you think about research is you can find this stuff for the most part pretty much anywhere, right? It's just a function of you can argue UI or UX. What were some of the main things at YCharts that you decided on as a company to focus on as a differentiating point? Because you alluded to this idea, you wanted to provide this data for retail, you become more institutional over time. But what were some of the things that you felt you needed to hone in on to be different?
Yeah, well, I'd probably sum it up and then I'll back up a little bit. I'd sum it up to say what we try to do is to make the complex easy and the easy quick and the mundane beautiful. I think there's all kinds of data in the market. You and I have been in this business for a long, long time. And in many ways, data is commoditized. However, there has always been a need to aggregate disparate sources of great data into one place. And so, problem we're trying to solve, number one, is how do you get securities data for stocks, ETFs, mutual funds, SMAs, UCITS together in a platform that also had all of the key data you'd want for hundreds of thousands of economic indicators. It's everywhere from retail gas prices to COVID statistics to housing starts to, uh, the GDP of Sweden. How do you get that together into one location that then you can start to do stuff with? So, problem number one was aggregate data. Opportunity number two is how do you make this easy to use? You shouldn't need to be a rocket scientist and enter command line prompts and be stuck to a physical terminal on your desk in order to derive insights from a whole lot of data. So the number two thing we wanted to do was to make it real easy to develop insights and use those insights to communicate. And then we figured our journey wasn't going to be done in just doing those two things, aggregating data, making an easy to use tool that overlaid all that data. Number three was people need help, even with the best of tools. And so we layered on a third component to what we do, which is really outstanding human support, where People will call us with problems or opportunities that they want to do and analyses on the markets, but they'll call us with all kinds of other questions. And we've just got a team that's there looking to help. So making the complex easy, making the easy quick, and making the mundane beautiful. And that's what we set out to do. And that's what we continue to try to do on a daily basis.
Is there such a thing as having too much data? Because I'm going to assume that part of the challenge is as a dev, as a developer, right? Figuring out not only where to get data from, but is it actually worthwhile for subscribers?
Yeah, that's certainly a real good point. It's the old I like wine, but drinking too much wine is not a good thing either. Too much of anything is too much, and the thing we try to do is really have that subset of data, which helps our target customers and our target user personas get their job done. So, I mean, to state the obvious, you only need one source of returns data, right? And those are kind of the obvious ones. But what are the additional data sets you need on top of that? Do you need ESG data? Do you need risk data? Uh, do you need crypto data? Do you need data associated with derivatives? When we come to layering in more data, we're really trying to listen to our customers and say, what do you need to get your job done? And knowing that you probably don't need two sources for fundamental data, we're going to try to find the best one. And we try to include everything in our package. So we're not big on nickel and diming people and saying, "Oh, you wanted to see a few more statistics. Well, that's going to cost you 5 cents more." It's included in our subscription, and we try to give you what you need, but no more than you require.
All right, so that's interesting. So, and it makes sense, obviously, right? You want to give the customer what they want. So, if they're requesting certain types of data, you're going to try and find a way to have it be made available. I'm going to assume during the lockdowns and during the height of COVID, there was a lot of focus on COVID stats and data, and I've seen that and posted those kind of charts. But in all your years of doing this, Sean, is there anything in the way that customers request for data that might be an interesting tell from a contrarian investment perspective, that there's so much focus on this data point that maybe you can fade it as I'm talking from an investment perspective, right? Sort of this
Mhm.
idea of follow what the crowd is looking for and then bet against it.
Yep. Yeah. I mean, you referenced a big one, right? Which is COVID statistics, right? Very, very topical in end of the first half and through the second half of 2020 and into 2021 was all the COVID statistics, everything from the morbid things of hospitalizations and deaths to the encouraging things like first vaccination, second vaccination, and those types of things. Very, very topical. Our clients wanted it. They wanted to see how that impacted capital markets. They wanted to see how that might have brought peace of mind or concern into their own family room. Um, Nobody's paying much attention to that anymore. So it's a very topical question right now, which is, well, how long do we continue to maintain that data set? And does that make sense to our customer base, or does that just increase the noise that's out there? Another one that's very much that we've decided we did hear enough of a groundswell from our customers was ESG data. Staying out of any political fracas that may be associated with the concept of environmental, social, and governance types of things. We had enough wealth advisors and asset managers who were coming to us saying, "Hey, I'd appreciate those data points. It helps me better address my customer needs, and it helped me form a more robust understanding of what a company may be doing." So we brought that into the
And
platform.
I have to assume that's also interesting from a business perspective. You mentioned aggregating data. Presumably, maybe I'm off on this, but do you have proprietary data? Have you built out a data set that only you would offer because of the way that you're calculating it or sourcing it?
Great question. We do a lot of calculations that overlay data, but we don't have our own proprietary data with a few asterisks. We do have some scoring for equities, Y ratings and things like that, which are our own proprietary thing. But we actually think there's enough really, really great data providers in the market that we think our job is to find the right one And then our job number two, again, is to make that data really easy to digest, derive insights from, and then use to communicate. So if you picked a security, we have tools that help you screen the security, narrowing it down from 20,000 candidates down to five that you want to do deep dive on. We're going to give you all the statistics you need on that security or group of security. We help you chart. We'll help you create reports. We'll help you do all kinds of analyses, scatter plots, et cetera, whatever you may need to do to get your work done. But we try to stay out of the business of being a proprietary data provider because we think there's so much value in being a uh, aggregator of great commodity data.
Right, and that makes the user experience all the more important, presumably. And I never really appreciated it until I went through this with my own app, which I have as a side gig. Let's call it how you dish. But the idea that you end up spending a lot of time and money developing the front end, the look, the way it feels, and you realize once it's launched, maybe your customer base wants something totally different in the way that things are presented, and that iterative process is actually really quite challenging, right, as a software company, because there's the
Mm-hmm.
old adage, as you know, right, you are not your user, so you've got to keep on
Mm-hmm.
tweaking things, but every single tweak can add up, right, in terms of expense. So talk us through a little bit that process of figuring out what the right look and feel. How did that process go about, right, in terms of getting the right UI UX experience?
Yeah, um, some great perspectives you've got there of some of the challenges that you have, especially as a SaaS software provider. I remember the days where I started out my career. I was a software developer, software designer, and I was working off of waterfall approach to software development, where the way waterfall works is some smart person that's like a business analyst creates a list of requirements, down to the umpteenth detail. Here's what we're trying to do. Here's what this screen needs to look like. Here's how this interaction pattern works. And they go create these detailed requirements and then they hand them off to a developer who spends a few months developing that and who hands it off to a tester who spends a month testing, who hands it off to somebody who's going to bring it into user acceptance and production. Over the course of that period, about 6 months have passed. And it's this comical thing that there's all kinds of funny comic strips out there about when the actual product gets delivered, it was nowhere near what is needed. The requirements evolved through time, all kinds of things changed, and you delivered something that was meaningless. The thing I love about software development today is agile software development means you are iterating on a weekly basis. YCharts is releasing software, and YCharts is right there with some of the front runners in the space. There are some who even do it on a daily basis. We're delivering software on a weekly basis. So that means we're trying to quickly iterate with our customers, and our product management team is usually a very good proxy for the market. Their job is to know what the customer wants, to know what they're thinking, to know how they live, to know how they work. If they're doing their job properly and interacting with customers and gathering feedback, they're quickly feeding what we're looking for into our engineering team, who's quickly building and putting it up into the market. And then with the tools that are out there today, we're very quickly able to see how people are adopting that functionality. We're able to see their interaction pattern. We know what they're doing with their mouse. We know what they're typing in. We know what they're searching, and we're able to quickly tell if we got it right. And if we didn't get it right, which sometimes we don't get it right, we'll have at max another 1 week of an iteration. So there's no more of this. Wow, we made something that took us 6 months and a whole lot of expense, and we got it wrong. Much more quick iterations, and it's beautiful because the customer benefits because they're seeing new features every week, and we benefit by getting it right and not having waste by creating things that don't get used. Yeah, Dan, really astute point you're making, which is um, when we're paying attention to the interaction pattern that our customers are having with our software, there are many layers to the onion of what we can learn from that. What we're doing with that information right now, and first of all, I should say with the utmost respect for privacy and things like that, is we will aggregate data anonymously to let our extended customer base know what others are doing on Y charts. And to make that more clear, we're going to address a little bit of the fear of missing out, FOMO, on what securities are being researched the most, what securities are trending in the opposite direction to what you're saying, what economic indicators are being highlighted, which is going to give all an eye to most of your peers are really interested in what's going on in interest rates, or most of your peers are interested in what's going on in the 30-year mortgage rate. We take those insights and we put out a monthly webinar where we're talking to anybody who subscribes about what others are doing on Y charts. Now, the thing you're pointing to is a couple steps beyond that, which is saying, hey, maybe if you know enough about the insights in the mindset of an aggregated set of users, maybe that gives you some perceptions of what's going to happen in markets. And we haven't gone that far yet to just say what is this harbinger for in markets, but we certainly have let people know what others are looking at in case they're not looking at it themselves.
Yeah, I always found that to be an interesting idea. So, Seeking Alpha, for example, has undercovered stocks that haven't been written about in 3, 4, 5 months, whatever the length of time, right? And it's always been my suspicion that if a stock is undercovered or underfollowed, it probably has more alpha because nobody's really paying attention to it, right? The idea of sort
Yep.
of creating strategies or indices around things which people are not searching for could be intriguing, right? To see if there's a way to, this is more of a side note, just create a strategy or an approach around the stuff the crowd's not looking at, which you guys would have obviously direct knowledge of. The Okay, so initially I was debating what to name the space. Y charts is certainly innovative in the data side of things, but I feel like the term innovation is used very loosely. Um, Explain what innovation in the financial services industry really should mean, and how you guys go about innovating beyond the iterations you just referenced.
Our main areas of focus are two. We want to help our customers make better investment decisions, number one, and we want to help them better communicate their insights, number two. So, any answer I give you is going to fall into those categories. How are we helping people make better investment decisions, or how are we helping them better communicate? Now, when we talk about category one of making better investment decisions, we rolled out, and Michael, I don't know if you've experienced this functionality yourself. We have some functionality called quick flows. And what quick flows are is we've certainly paid enough attention to how and what our customers are doing with our software that we know based on your click stroke pattern today that what we think you're heading towards is you want to do a side by side comparison of two portfolios because you clicked on one portfolio, you made a portfolio, and you clicked on another one, and we think we know where you're going. We're going to put up a prompt that's going to ask you, were you trying to do this? And then knowing that you're trying to do that, we're going to save you from going and having to create your own side by side comparisons. We're going to instantly just tell you what two portfolios you're looking to compare, and we're going to do the analysis for you and bring you to a screen where the analysis is done. And then you can take it from there. So that's an example of us trying to say, we know what smart investors do. We know how smart investors take fundamental analysis and technical analysis independently or together and walk down a path. And whether you're an expert investor, we're saving you time going down that path, or maybe you're a little bit less of an expert investor, we're going to guide you down a best practices path. So those are the kind of things we're doing on the investment side to help more tools, scatter plots, different types of analyses, more robust screeners, quick flows, things like this. On the communication side, we believe that an insight, generally speaking, needs to be communicated. It may be as simple as you want to post something on social media to share your insight, or you may be going in front of a investment committee, or you may be just trying to convince a spouse of what you want to do with your nest egg. We have tried to create some amazing visual tools, only one of which is charting, um, but a whole bunch of other ones. I've mentioned a couple times the concept of scatter plots, but all kinds of dynamic and static reports that are elegantly designed that you can take with you. We've tried to integrate with places like Twitter, LinkedIn, et cetera. So if you got an idea and you want to blast it out there pretty quickly, we've tried to make that very easy. So I guess in summary, I'd say we're trying to innovate around our two key themes of making people, allowing people to make better investment decisions and be better communicators, and trying to really push the envelope on both of those to get you there quicker and to get you there in a more beautiful, elegant way.
What are some of the things that investors have been focusing their search terms on this year that maybe are a bit of a surprise to you? So, obviously everyone is, or most people are largely negative and bearish. Are there any interesting things that you've come across that your subscribers are searching for that almost seems counterintuitive to the macro environment?
Well, besides everybody trying to stay abreast on what's going on with interest rates, we've seen a lot of what we believe is behavior with people trying to understand the leading indicators of bull markets and bear markets. We have an unfortunate answer for people who go searching to say, well, what are the best indicators that we're going to go into a recession, or what are the best indicators that we're heading towards a massive and extended bull market? Unfortunately, there's no great answer out there. We're back to the general rules we all learned with markets, which is if there was an answer, that answer has been arbitraged away long ago. So there's no easy answer, but we do see people still searching for those answers. We see a whole lot of people who used to be huge believers in a 60-40 model portfolio, with the fixed income portion of that portfolio going to be there and safe and rising during tough times. We're seeing people say, well, it didn't work out so well this time. So what is a better equivalent of a fixed income security, or what could I fill that 40% of the portfolio with that's something that actually may have some significant upside to it? So we're seeing people try to solve an age-old problem, which is how can I get ahead, or how can I understand what's coming, and how can I try to get ahead of that?
I find that not surprising, but also interesting because people are worried about fixed income not being safe when they should have worried about it. You can argue a year ago, right? It's like by definition, the more yield you have, the more cushion you have. It's just funny how psychology ends up playing out with a lag, I think, when it comes to this stuff. But let's go to Dan
Yeah.
Weisskopf again for a question. Go ahead, Dan.
Yeah, great question. So we've got quickly approaching 10,000 customers. About 20% of those are retail investors, which, honestly, sometimes mixed in there are, hedge funds and prop shops and university endowment funds and some things that we can't quite decipher. But I'd say we've got 20% of our customers are retail investors. Another 60-ish percent of our customers are wealth advisors, whether that's in the form of I've got a billion in AUM or 250 million in AUM, or I work for a very large broker dealer. And then the balance of our customer base is maybe a mix between asset managers themselves, who are trying to understand what's on the mind of everybody else and how they can pull funds, how they can pull asset flows into their funds, or private equity firms or hedge funds. We do not. We do not. we we're always trying to stay attuned to what our key user personas want. That just hasn't been one that has risen in priority. But if somebody's really looking for an embedded chat functionality, YCharts does not have that. Yeah.
The how so this is something to me is interesting. So I know a lot of guys at the CMT Association and a lot of research analysts, and there's always this joke that those that sell only research, tech research, they do okay in bull markets, but in bear markets, they're the first to go, right?
Mhm.
How do bull and bear markets impact demand for services like what you offer from the data side, right? In other words,
Yeah.
when everything's I'll be honest, right? When everything's going to shit like this year, right? Is there a feeling by people that, well, if everything's going to hell, why should I even bother playing the game? Or is there even more demand for more data because people feel like they
Mm.
need more information to deal with this environment?
Yeah, it's a great question, a very topical one too, because um, I had a discussion with my wife over a glass of wine one Sunday when we took a look at our personal portfolio, and we said, bear markets are not a good thing for our personal net worth, but it's a very good thing for the Y chart's underlying business. Volatility drives people leads to uncertainty, which leads people to want to dive into the details. Bear markets put an emphasis on, if you're an advisor, doing your job very well. And it also puts an extra emphasis on going and getting more customers because your AUM has dropped. And our tool is very, very helpful for advisors, asset managers, and others who are trying to sell services or sell ideas. It's a very helpful tool to help them better communicate those ideas. So, short answer is volatility and bear markets are and I feel blessed to say this, a very good thing for our business. It's not really a very good thing for my personal net worth. And so my wife and I, Sundays, will step up the number of bottles of wine we drink. Yeah, that's a super good point, because one of the things we didn't talk about is Bloomberg just raised their price to 30K per terminal per year. A
Inflation's
subscription,
everywhere. Inflation,
yeah.
inflation's everywhere, right?
Yeah, we haven't done anything like that yet. Our software is 6,000 per seat per year. So in tough times, maybe 20% of your Bloomberg terminal users, you realize, aren't using all of the functionality that you're paying $30,000 a year for, and you can turn in one Bloomberg terminal and turn on 5 Y charts licenses. So, listen, in tough economic times, though, people are certainly questioning their companies question their budgets. Um, I have never been part of an organization, though, that looks to cut expenses in sales. That's usually the last place they go to, is marketing and sales, to cut budgets. They're usually looking for back office operations and things like that. So, more and more Y charts is helping people sell services or ideas.
How do you since Bloomberg was mentioned, how do you compete against a Bloomberg, right? So I mean, I know this from my days, at an RIA. I mean, they've got an army of people that are, basically door to door, literally coming by and trying to sell you on the terminal. And obviously it's a mega company. Talk about some of the challenges, just from a competition perspective, in terms of not just differentiating your offering, but just how do you get in front of willing buyers?
Yeah, listen, I mean, I have all the respect in the world for Bloomberg and Morningstar and FactSet and S&P and some companies that do great things in the market. They most of them came about a whole lot earlier than Y charts, and they used the best technology that was available at the time that they got going. One of the things, and it's always the case with technology innovation, is keep an eye on the new guy, because that new guy's building things based on the latest technology and trying to solve the latest problems. Um, so to answer your question, listen, if somebody is a lifetime Bloomberg user, and it's in their blood, and they're change averse, we're probably not going to get their business, or maybe even get their eyes to take a demo. Um, but if somebody is saying, I'm sick of command line prompts, I'm sick of the learning curve to learn this stuff, and I don't really want to be tied to a physical terminal on my desk or kind of the technology equivalent to that. They're coming to us, SaaS browser based software, forward, backward, predictive search kind of stuff, just super, super easy to use. You don't need to know a single command to use our software, embedded chat, all of these things, just really, really easy to use. But we like to make sure prospects understand up front, we do not have every single thing a Bloomberg terminal has. Dan pointed out chat. We don't have chat. We are not going to have global fixed income, and we're not going to have some derivatives. So there's things we just like people to know up front, like this is what we have, and we do it really, really well. But we want you to come to us and buy us and love us, and not find out 3 weeks into your $6,000 per year subscription that we're missing something that's important to you.
So, because you mentioned you yourself invest, I'm curious how you're managing this environment, and if you're using, I assume you are, Y charts to figure out if you should take an action or not, right? If you, as somebody who's looking at this data and then obviously managing your
Yeah.
portfolio, what are you yourself focusing on?
Yeah, that's a great question. So listen, I have two finance degrees. So I believe I have all the training in the world to manage my own nest egg. However, I'm very short on the time to do that appropriately. So uh, I leverage a wealth advisor, and I don't hesitate to mention leverage a company called BDF. Um, great thing with BDF is they also happen to be Y charts users. So it's endearing and comical when I sit down with my advisor to talk about the right way to prudently manage my family's money, that they'll pull up Y charts and they'll be showing me what we're doing, why we're doing it, what the risks are, what the relative merits of the investment approach are. They'll be showing that using my company software, which is just brings me huge delight. But long and short is, I think investing is hard, and I think you need time, even when you have a couple graduate degrees or finance degrees to do it. So the right decision for my wife and I was to outsource that, and I'm always there on the sidelines to challenge the thinking and to propose some new things. But otherwise, I personally sleep a little bit better knowing somebody else is keeping an eye on my nest egg.
Yeah, no, that's fair, and everyone has to focus on their core areas of what they're building, right? I mean, you've got
You know,
high concentration already in the financial service industry just by the very nature of your position. Now,
yeah.
there's this old adage or idea that you want to build a tech company ultimately to be bought out. How do you think about consolidation when it comes to data aggregation, through the aggregating of the data aggregators?
Mhm.
Is there internally or even among investors, is there a hope that at some point there will be a buyout? Is there the idea that maybe you guys would be acquirers? How do you think through that? That
So I've been around the block again 30 years, and again I cringe when I say 30 years because every once in a while I still feel like a young guy who's starting out my career. But I've developed a bias that says to build a great company, don't pay any attention to how you're going to exit. Build a great company to solve hard problems and to solve them well, and build a great company that unbelievable employees want to come work at and stay at for their career, and make the customer thrilled. Build a company like that and continue to question whether you're doing the right things in doing that, and exits happen from there. And I've been super blessed that I've been a part of three very, very nice exits. The last one being I worked for Interactive Data, led a division of Interactive Data, and we sold for almost $6 billion to ICE, the owners of the New York Stock Exchange. And there's a huge portion of luck in the exits that you have. But when you control the things you can control, it's focus on the customer, don't focus on the exit. And hopefully good things can happen.
Yeah, I love that, because I just did space with a friend of mine who uh, had a company that got bought out by a WeWork company. Was called Spacious,
Yeah.
and the exit literally happened just before the valuation crash and just before COVID. unbelievable timing, in the way that that valuation ended up happening for him, just in the nick of time. And I think that's spot on. Obviously, you got to focus on the clients; the rest will kind of resolve itself. But I have to assume that because there's so many different sources and places that you're aggregating data from, that there's probably a pretty high barrier to entry. Meaning, it's not like somebody can easily come in and make a competing Y charts. Talk about moats for a moment, because if you don't have proprietary data, maybe it's just a function of purely the UI and UX. But how do you make sure that somebody else doesn't come in to eat your lunch, so to speak?
Yeah, it's such a great question, and it's the there have been books written on the topic, and I think I've read just about every one. And the thing, so what's our moat? Our moat is the combination of the three things I mentioned to you, which is great data, incredibly powerful, easy to use tool, and awesome customer support. I'm stating that publicly right now. So yes, somebody can come and try to replicate that. And I hope people do try to replicate that, because it keeps a fire under our butts to keep moving quickly. And we pump an awful lot of money into R&D. And I believe that great engineering teams that are led. We have absolute world class product management team leading an absolutely stunningly great engineering team. And I believe if you continue to iterate super quick, and you are building a really appreciative customer base, and you're measuring that, you're asking them, what do you think of us, how did I do today? You're monitoring how often are they using your application, are they using it more this month than they used it last month? If you just keep the speed up, anybody who sets out today gunning for you is going to gun for where you are today, and in 2 years, when they're able to get where you are today, you're 2 years ahead. So I guess all I'd say is we stay vigilant, we're not arrogant, we pay attention to what others are doing, but we think the best way to control our destiny is to control our destiny. And that's just keep innovating, keep listening, and never get complacent. So when I mention weekly releases, when I mention pumping more and more and more into R&D each year, those are just some mathematical ways to say we can't rest on our laurels at any point in time. Dan, super smart question again. I I think if you have a commitment to constantly questioning your business and constantly finding problems or constantly finding opportunities, and you're continuously committed to automating things that people will do, um, so that you can hire more great people to do things that machines can't do. Um, we're along those lines. I don't yet know of a machine that can code. But if that ever happens, we'll try to apply a machine to coding so that we can take some great engineers and help them improve our infrastructure, our internal infrastructure, so we can take the analytics from our data and learn more about how customers are using it. So in some ways, the growth and the spending that's associated with the growth is just scaling things you already do. In other cases, it's saying we have this overlay of processes, operations, and technology, and the people that go with it, and we have to innovate there too. And when you're a 10-person firm, you've got exactly two layers to your organization. You've got a CEO and you've got everybody else. When you get to be a 120-person organization like we are now, you're investing in middle management layers. You're investing in having a presence in different geographies. And you're constantly finding, hey, if I'm going to get the business to the next level, where is repeat and stair step investment required versus where is net new investment required, so that we can be more efficient and also be more innovative.
So I see on the Y chart site that American Banker puts you as the one of the best places to work in fintech, and presumably the bulk of your labor force is remote.
Mhm.
This is always an interesting thing, because we at as a growing firm, the challenge is always how do you build a culture digitally, right, as opposed to in person. Um, Talk about how you build a culture with people in so many different parts of the globe working for you at different time zones with different
Mm.
objectives. Because I got to imagine that's really difficult from the top.
Yeah, I mean, we had to reinvent our business on March 13th, 2020. That was the last day we all went to the offices. And the big concern was for us, well, we are absolutely a culture driven place. And yes, thanks for referencing. We did win the number one best place to work in fintech from American Banker, and we were thrilled with that because we're culture driven and we believe we do something special. And we thought that special stuff all happened in the hallways. It was the way we interacted with each other. When we were throwing darts, or when we were having a snack in the refrigerator over the water cooler, or the practical jokes. We thought, wow, that's how our culture is defined. What is going to happen to that culture in this new world that we have to evolve into? Um, what we found is you can do a lot to recreate a similar culture in the virtual world. A couple of examples of what we have, and it's hard, but every week we meet. The entire company meets on a video conference, and that video conference is one part going over business challenges and results and our strategy and things like that. It's another part highlighting humans within our company and what they did that was great, and where they grew up and what books they like to read. And so we do a whole lot of things like that. A whole lot of We've leveraged the hell out of tools like Slack to create communities, to create engagement, to create camaraderie. And so I believe the keys to a great culture is, uh, first of all, define it. Second of all, don't take it for granted and do things to foster it's to maintain it, and bring people in who conform to the culture, but also help stretch the culture into new areas. And I've been so thrilled with my team that on a given day, we might have 10 to 15% of the people in a given city where we have an office actually come in, but our business is growing at 30-40% a year, which means we've all adjusted. Our staff is sticking with us. I'm so grateful and thankful for that. We don't have high attrition problems. And I think that's just because we're committed to saying, how are we going to make this culture work? Because it's unlikely that our company is ever coming to the stage of ever saying again, Monday through Friday, we'll see you in the office. So you adapt like you do with software. You listen to your target market, you adjust, and you succeed.
And what's the makeup of the types of work that the labor force is doing? Is it primarily data dev? What's sort of the primary? Because I have to assume you mentioned growing 30% annualized per year. You don't want to obviously grow your labor force by the same percentage.
No, that's the beauty of software. Build once, sell umpteen times. Um, if we're growing our company by 35%, we're growing our staff in a given year by 15 to 20% kind of thing. And where are we investing? First of all, and first and foremost, engineering, R&D and customer support. That's where that's what makes our customers thrilled. Um, but we do invest a lot in marketing and sales, and we're very, very lean in overhead. Our accounting and finance staff is the best in the business, but it's 3 or 4 people. We just hired our first ever administrative staff member who is incredible. But we're just not a place that has a hefty um, back office operational infrastructure. We're investing where we think it benefits our customers the most.
Do you find that it's harder or easier to find talent now? Right, because you often hear that when it comes to a challenge for a lot of large businesses. Talk about how you find people for a moment, because I got to imagine that's still probably a little bit challenging.
It is a challenge. The challenge is always the challenge remains the same. How do you get into the heart and soul of the person you're talking to? We've just had to develop some new tactics to get into the heart and soul. It's not a problem to get resumes. It's not a problem to get a call scheduled. It is a problem to really get to know somebody when you can't have, or you may not be able to have a lunch with them and sit down and just really get to know them um, in the interviewing process. So we really try to break up the way we talk to people to understand their backgrounds, their work styles, their passions in life, um, their biggest frustrations. And but we've always tried to do those things. And our biggest rule is we don't hire jerks. We want you there's no place to hide at our company,
Wait,
and we want you to.
what you're saying is you don't hire anybody from Twitter. Is just to be clear.
Yeah, we actually have hired and recruited some people that we met on Twitter. We're looking for self-started people who are intellectually curious, who want to be noticed. They don't want to hide, and we want people who can throw all of their waking hours into being passionate about what we do, while also saying, when one of my colleagues succeeds, that doesn't mean I lost. It means we won. And so when I call myself head coach, it's because I truly believe I'm the head coach. My job is just to uh, work with the team to come up with a game plan, and then make sure the right people are on the field in the right roles, and then stand on the sidelines and cheer. And when there's some course corrections needed, that's where I can play a role too. But anyway, recruiting has not been tremendously difficult for us during the pandemic times. It's just we've had to change some tactics.
And outside of COVID, what else has been particularly challenging for you in your role at Y Charts? Is there something that happened from a business decision perspective that ended up not going the way you thought it would? Is in past, what were some of the things that or challenges that you went through pre 2020?
I think the toughest challenge we've had since I've been here is, and it worked amazingly well, is to go from being a tool that was pretty darn good for anybody who wanted to use it, to saying, you know what, we want to be really great to the target user personas that are most important to us, and really having the organizational discipline to understand sometimes that means you have to say no to some things. Sometimes that means that a customer that you value tremendously, that is, a hedge fund, and they want to see certain derivative data in your platform right away, having the discipline to say, I value you as a customer, but I have a hard time prioritizing that right now because the target market that we're most shooting for does not prioritize that. And job number one is for us to listen to them. So I think when I arrived at Y Charts, I think we were the analogy of a mile wide and an inch deep. I think we've quickly transitioned into being, 4 inches wide and 5 miles deep, which has helped us just grow at the rate we're growing, and to have, I don't know if the term NPS scores means anything, net promoter scores. We have absolutely off the chart net promoter scores of 60 when world class is 50. We have those because we're focused on our user persona, and happy to have anybody else come be our customer. But job one is to do right by client number one.
We'll do one last question. Everybody, please make sure you follow Sean Brown. I'm sure reach out to Sean if you're curious to learn more about Y Charts. But go ahead, Dan Weishoff.
It took me a lot of years in my career to get there. I think there was a stage where I started out my career working for Accenture. There was a stage where I had the global record for the number of hours billed in a year, and it had a tremendous toll on my personal life and honestly my health and well-being. And I learned when I was about 24, 25 years old that this thing my father had always preached to me, which is balance, really meant something. And I just remember writing down some rules that said, I'm going to be in shape. I'm going to have friends. I'm going to take vacations and see the world. I'm going to read at least 12 books a year. And I just set some rules for myself that I've held myself accountable to year after year after year. So, listen, I can say that, but I won't hold myself up as a model because I struggle with it every day. But I'll tell you, I think I do have I've struck a pretty good balance that works for me and my family. And vacations are sacred to me, but that doesn't mean I'm completely turned off. It means, I may be checking emails from 9 to 11 p.m. when my family's gone to sleep. Um, but Dan, it's a real challenge, and I'm good, but I'm not great at it.
I don't think anybody can be great at relaxing when you're fighting every single day. But it is what it is. Anyway, this is a fun conversation, different than what I usually do for these spaces. I can say this by the way. This was not a sponsored conversation by any means, but really, Y Trust does have a lot of phenomenal data. So I do encourage those listening to learn more about Y Charts. Check it out. And Sean, appreciate you spending the hour with us. And everybody enjoy the rest of your night. Thank you, Sean.
Thanks so much for having me on. It was a thrill.